Good morning, traders. Richard giving a quick Ichimoku cloud chart market review of the S&P 500 index. We'll start with the quarterly S&P 500 cloud. You can see recently the market did manage to rebound from the turning line of the cloud, that little green line there. A nice little rebound from that zone. This is also very close to the front end cloud chart support zone, the top end of the cloud here at 3473. But the actual rebound did take place, if I put a line in there, just around there at the, what was that low there? 3636. So 3636 roughly is the cloud chart rebound support line. It's bang on the turning line of the Ichimoku cloud on the quarterly Ichimoku cloud chart. Now, there's still downside risk to the next cloud chart support level is the standard line of the cloud there at 3311. And then the other risk, downside risk factor is the front end of the cloud, this zone there at 2843. So these are the downside risk targets in this current correction. Now you can see that it's still an early stage correction. If we compare this rally and this bubble, this conspicuous consumption bubble to the 2000 bubble, we still got a long way to go in terms of a correction back down to the top end of the cloud, where it's the key support zone. So the market's still very much extended, and this is kind of the first leg of a much larger potential bear market right back down to 2840 in the S&P on the quarterly. Now let's turn to the monthly Ichimoku. Front end cloud chart support level on the monthly is this level here at 3,500, and that coincides well with this standard line of the cloud also support zone. So keep in mind 3,500 is the front cloud support zone on the monthly chart, so we're still at risk of testing that level again. And any price action below the cloud is bearish, but still, so far so good. Still above the top end of the cloud, but with downside risk back down to the top end cloud chart support levels on the monthly. So keep in mind, 3,500 is the critical zone for key support on the Ichimoku monthly. And the index did sell off right through the top end of the front end of the cloud. So the 4,000 support zone did not last on the monthly. Now, if we take a look at the weekly Ichimoku cloud, we can now see we're in a confirmed bear market on the weekly. Price action is below the cloud. Any price action below this bottom end cloud chart level is overall bearish. And there was a beautiful sell signal right up here in the market on the weekly, and the sell signal was a little bit higher on the daily Ichimoku cloud. And then there was a second sell signal when the S&P sliced through the bottom end of the cloud. So that's the ultimate position to have been in cash when the market sliced through 4,100. We're now in bear market territory. There are short-term swing trades as the market can rebound from these cloud chart support levels here. And we can see we're on our way to test the turning line of the cloud here. That's a new resistance zone, as well as the bottom end of the cloud here. That entire range of resistance levels there is the new resistance zone in this current bear market. So price action below the cloud is a confirmed bear market in the S&P on the weekly Ichimoku. And you can see this comes after the market became very extended, had a nice rally from third quarter of 2020, sliced through the cloud, generated multiple sell signals on the way down, and we're now in bearish territory with rebound potential from these critical support levels from an Ichimoku cloud chart perspective. Now let's take a look at the daily. Price action below the cloud, there was a beautiful cloud chart sell signal right up here at about 4,600 in the S&P. Roughly there, let me just take that, it was around about there. 4,600 was the cloud chart sell signal, and then a secondary sell signal was at this level when it sliced through the bottom end of the cloud. They did not regain support there, and then you can see how the cloud became resistance. There was a brief little rally cloud cross signal there, but only to run into trouble at the old resistance zone here, bottom in the cloud there. You can see that resistance level held, and then the taps opened and the market remained in bearish territory when it sliced to the bottom end of the cloud here. So we're still in bearish territory, but we did get a rebound from 3638. That's a critical cloud chart zone, support zone, and if we scroll back you can see where these levels come from, these multiple cloud chart levels, as the market sells off, we've got these cloud chart levels to watch out for potential rebound levels. So the bottom end of the cloud there, these levels are critical cloud chart support zones for potential swing trades back up to the bottom end of the cloud, which is now the new resistance zone. So for the current rally, it should be an easy rally back up to the bottom end of the cloud here. And then the key levels to watch out for on the daily is these levels here. 4081 is a major resistance zone, and then this one at the bottom end of the cloud here as well. So these are all bear market rallies, little bull market rallies, and overall bear market since price action is below the cloud. Now let's take a look at the 4-hour Ichimoku. Not in bullish territory yet, because price action needs to be back above the top end of the cloud here, bottom of the cloud at least there. So we really need to see a breakout past these levels here from an Ichimoku cloud chart perspective. That will change the outlook from bearish to bullish. So it's bearish on 4-hour, bearish on daily, bearish on weekly with these short-term relief rallies from a swing trade perspective. But long-term perspective, there aren't any long-term buy signals on the chart yet. We're only trading these swing trades from these key support levels back up to the bottom in the cloud. And you can see how that strategies work when we get to key support back up to the bottom in the cloud. And you can see there the top end of the cloud, they became key resistance zone. So we really need to be back above the top end of the cloud here on the 4-hour to be bullish on the 4-hour. So swing trades from support back up to the bottom in the cloud. These are the trade setups on the 4-hour one. If we turn to the hourly, it's a bit more high frequency. Back above the top in the cloud, so the hourly is bullish, and we can see a pullback to the standard line in the cloud here, or potentially a sell-off back down to this cloud chart support level to test it at 3782, and then rebound further from there. But you know, the hourly one is not as reliable as the 4-hour and daily one, but there are some swing trade opportunities here. You can see this 3638 made a nice swing trade back up to the cloud chart resistance. Now waiting for the next swing trade from these support levels, a test of the turning line of the cloud, standard line of the cloud there, and then the top end of the cloud there in the hourly. But as long as price action stays above this cloud chart level, it's bullish on the hourly. So there are some signs that we might get a nice little relief rally based on the hourly one. But we can see where this rally can last up to. On the 4-hour chart, we can see it can get back up to these resistance zones. It's currently testing the front end cloud chart resistance. We really need to see a cloud cross on the 4-hour, something similar to that, and then we can get a nice little pop of a couple of points up, as it's going to test the 4-hour 57 and 4081 upside resistance zones on the Ichimoku cloud on the 4-hour. But so far, still struggling. The market's rebounding from old cloud chart support levels for the bottom end of the front end of the cloud as a key resistance zone. So the current rally can last up to about 40.57 and 40.81. And until then, we'll reassess the situation when we get there. Until next time, happy cloud chart trading. Bye for now.